Well, Mark Bouris, in addition to being a founder and chairman of wealth management company Yellow Brick Road, is also the chairman of the Small and Medium Enterprise Association. Well, federal and state governments have provided massive support to businesses across Australia, but of course many fear that that won't be enough to stop thousands of businesses from folding next year. I sat down with Mark and I began by asking him whether the JobKeeper package was enough.
It has been enough. Bear in mind that it was introduced very, very quickly and it was a broad-based introduction, so it had to be something that covered everything off straight away. But I actually think that where we're going is that they're going to have to start to target environments.
Well, just on that JobKeeper payment, it was actually scaled back this week, of course, and it's due to completely end by the end of March next year. Presumably a large share of small businesses just won't survive when it's wound back.
I think that's exactly the case, but I am sort of anxious to see what the October budget brings for us, because my gut feeling is that they're not just going to abandon various industries. So there has to be a number of incentives, probably even right across the board in terms of cash payments. I saw today that they were talking about introducing $1 billion into the manufacturing industry. So I think they're going to start to pick industries or pick market segments and start to bolster those environments. But JobKeeper, when it comes off, if nothing else happens, segment by segment, there's going to be a major problem.
So what specific policies would you like to see in next week's budget on the small business front at least?
Well, I mean, I have one. I mean, I haven't even put it to the Treasurer, but I mean, it would just be too close. But I mean, like, we have carry forward losses in this country. So, you know, from a tax point of view, it's fiscal policy. But from a tax point of view, you carry forward your losses. Say if we made a loss in the 2020 year, I can carry it forward into the 2021 year. And then I get, I get a tax deduction for the loss I made that year. I'd like to see carry back losses. So, like, if I make profit in 2019, paid my tax, but in 2020, because of COVID, I've made a loss, I'd like to see us to be able to carry back the loss from 2020 back to 2019 and get a refund. So, I mean, I know that sounds a bit out there, but that's an initiative because, you know, we can carry forward our losses, we should be able to carry back our losses. And I'm only suggesting a year, carry back our losses a year. So that's one example of where somebody who did well in 19 without COVID has done badly in 20 with COVID through no fault of their own, is bearing a greater burden than everybody else. Then maybe we, the Australian people, through the tax system, can give them something back that they paid into the tax system, into consolidated revenue in 2019. And I think that's a fair thing. It's not asking the government to put their hands in the till and make a grant to anyone in particular. If you paid tax in 19 and you made a loss in 20, then maybe you can get a part refund or a full refund for what you paid in 19.
Well, just in terms of other new policies, the government has announced plans for a US-style bankruptcy regime, which presumably sounds like good news for a lot of small businesses, but is there any risk that it could make it actually harder for them to access finance, if, of course, it's harder for creditors to get their money back? Well,
that's a very good point. I mean, like, at the end of the day, if their credit rating file gets affected by what they have not repaid, which is, by the way, it will, irrespective of the proposed changes to the bankruptcy regime and the liquidation regimes, and where it affects officers of a company, irrespective of that, that will be on their file in terms of their negative rating, and as a result of that, it will affect their ability to borrow money. So it might make people feel a little less risk averse. Or it might make people in business a little bit more prepared to stay on as a board member and support the business, because their liabilities are probably slightly reduced. But at the same time, it does affect the ability to get money into the business. And liquidity, this is all about liquidity. Everything's about liquidity. The government announcement last week about talking to banks about responsible lending rules, that's about liquidity. It's about somehow trying to get more money back in the system. Now, the government will give us some money. The government will keep paying the JobKeeper. There'll be job seeker payments, of course. JobKeeper payments, albeit at a reduced rate. There's probably going to be other areas of infrastructure expenditure. But liquidity, at the end of the day, is controlled by the banking system. So, like, responsible lending is one way we can get more money back, or the dropping of responsible lending is one way we get money back into the system and spent.
Just moving on to the property market now, it's been pretty amazing how a little actually capital city house prices have fallen this year. Certainly early this year, people were saying 15% fall, 20% fall. I think it's only a few percentage points down. Do you see them levelling off?
In Sydney, yes.
In Sydney, but also even in Melbourne, it's only a few percentage points down.
Yeah.
Correct me if I'm wrong, but
no. It's
where
more,
do you see them going from here?
It's down more in Melbourne, but my gut feeling is once Melbourne gets back up on its feet, which seems to be it's not going to be too far away, my gut feeling is Melbourne will bounce quickly again, like probably more quickly than Sydney has. Sydney's doing very well. The number of transactions is a lot lower. So
but the prices just aren't quite as reliable, then you'd say?
In terms of the number of transactions, yes, I would say that. But in terms of the transactions, everybody's getting good prices. I mean, I know some people are getting phenomenal prices. I mean, there are places like if you go up to Byron Bay or that Ballina area where there is an airport, there is a hospital. It's close to Lismore Airport as well. It's close to the Gold Coast Airport as well. There's lots of infrastructure around there. Prices around there going mental. Because people are saying, I don't have to work in the city anymore. I can work from my home. I can live up here much cheaper than I can live, say, in Sydney. I can get some change out of what I sell in Sydney and move up here. And at the same time, there is people in Sydney who are paying phenomenal prices for lots of properties around the place. So my gut feeling is all these various protestations and, predictions about 2021 when it comes to property prices, my gut feeling is property prices are actually going to go pretty hard.
Well, just in terms of your own home lending business, Yellow Brick Road, what are you seeing in terms of flows at the moment?
If I just park Victoria for the moment, because Victoria is a bit of an anomaly, but relative to the rest of the country, our flows are no different to what they were a year ago, period on period. We seem to be lending slightly less, so the net present value of a loan is a little bit less, but we are lending slightly less to people who are buying, which is a good thing. It's taking a lot longer to get a loan approved because of the responsible lending rules, which we haven't seen the legislation proposed for that yet, and it's not going to come until sometime next year. But responsible lending should allow us to be able to move faster on a home loan approval and a home loan application. But we had a record year for Yellow Brick Road in 2020, so we weren't affected at all. No JobKeeper.
Has the government's home builder package actually changed the flows at all, or it's just too small to move the dial?
It has in Victoria. So branches like we have in Ballarat and places like that in Victoria are absolutely killing it. We have huge pipelines of people applying for all the various monies that the federal government and the state governments are giving, particularly in Victoria, for people to buy and build house land packages. We're experiencing the same thing in New South Wales, to less extent in Queensland, but we are definitely experiencing the same thing in New South Wales. That's probably our biggest new loan growth part of our business. But where we are getting enormous growth is refi. Okay. So right now, if you borrowed your money a year or two ago, or maybe say 2 years ago, which is a big percentage of the market, you're more than likely going to be paying a higher interest rate. If you've got a 3 in front of your interest rate, you should have a 2 in front of it. Indeed. The refi market has just gone mental. Well,
just on the direction of interest rates, I mean, I know you can get loans now in the low 2s. Is this basically as low as it's going to go?
Well, they're talking about the Reserve Bank's perhaps going to reduce rates by maybe 10 more basis points or something along those lines. The question is how much of that will get passed on by the retail banks or the retail lenders. Probably right now everybody's enjoying quite a good return because the spread in relation to the cost of funds relative to the retail rate's quite good because there's predicting sort of lower rates. But let's get past that rate movement. Margins aren't all that great at the moment for the lenders. So to be frank with you, I don't see there being a lot of that rate reduction by the Reserve Bank being passed on to borrowers as a result of that. Other than just normal competition and banks and lenders trying to get more market share, I don't see retail rates moving too much more. You're seeing some great fixed rates around at the moment. I mean, you can see some brilliant fixed rates at 2.19, 2.2.
Certainly, I just actually refinanced myself for 2.09.
There you go. So they're great rates. I mean, and I don't, look, if there's another 0.05 in it, maybe another 5 basis points perhaps, but there's not much. These are the best rates I've ever seen. And
just finally, you're on the board of the Sydney Roosters, I believe. Of course, live sport has been crushed by the pandemic. Do you see it all kind of roaring back, bouncing back next year without too much long-term damage?
Well, I mean, assuming everybody can get back into a stadium, the answer is that is yes. I mean, in terms of sport, like organisations like the Sydney Roosters, we rely on the gate as part of our revenue stream. We've been very fortunate because of the various JobKeepers payments, etc., that have been coming through. So we've been, in that regard, all clubs have been blessed. The NRL's been very good to us all. So we've all done very well. And, of course, the broadcast rights are still paying. So the NRL has money to give to us. But unless you start getting crowds back to the games, there's going to be a problem. My gut feeling is that people are dying to go back to football. I mean, they really want to go back to the footy. We'll see it in a couple of weeks' time. In fact, we'll see it in the next 2 weeks when they're sort of doubling the capacity of the stadiums, and it's sort of one seat vacant, then one seat. So they're talking about 40,000 people at ANZ Stadium. That's a lot of people still to go to a footy match. I reckon they'll fill it.
Okay, well, fingers crossed. Thanks for your time, Mark Bouris.
Most welcome.
And that was Mark Bouris there. I should have said the former chair of the SME Association. He is currently the chairman of Small Business Education Program Mentored.